The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 18th day of April. And thank you to our great hosts that we've had. Remember, we start 9 before 9 Eastern Time. We start our programming right here. And if it's a Tuesday or a Thursday, you've got Nico and Paige right there at 7 o'clock. So Dow's down. Let me just do this slowly. The Dow is down at this point, 96 at 20,538. It's getting a little further away. These numbers getting more difficult to see. Let me just put it right here. INDU. We'll do them one at a time. Look, the Dow has made the arch formation. It is down 101 at 20,535. That bounce yesterday was a reflexive bounce. Remember, we discussed it in terms of the Chapman wave trend gauge said that within 2 days from Friday's flashing sign that there should be a 9 to 11 point rally in the S&P futures, and that should be reflected in the cash indices. Well, we certainly saw that. However, there was a short covering exponent to this. That's what I consider it. It was that last, what I said to subscribers for my opening call, that extra 60 points, 50, 60 points yesterday to the upside was really just a nervousness to be on the wrong side. Well, they were on the wrong side. That's my opinion. So we're waiting for Chapman Wave 5 in the Dow to occur below 20,412. That will also be leg D to the downside. The weekly chart has already made a peak D at 21,167, and we're going to be watching this. So I'll just run the numbers. The S&P is down 7, just over 7 at 2341. 23. Let me double check that. 2342. And the comp index is down 16 at 58.40. The gold is down $1.30 at 12.90. I think gold's taking a bit of a breather. I'll go through the chart in a moment. You've got silver down 22 cents at 18.28. High-grade copper is really looking poor at 2.53, down 6. This is really not a good sign for the world economies. You've got crude oil up 4 cents at 52.68. Bonds are up at 154.22, they're up over a point, 1 and 30 seconds, and you've got the dollar down 47 ticks at 99.7. A lot of things are going to occur right here that are going to tell people, if you're frustrated because you're not sure what's going on, try to keep it as simple as possible. Let's go back to this E-mini. E-mini is only down 675. At 2338.50. It made a round number high peak D in the Chapman wave at 2347. Let me just show you a couple of things here. What do I mean by a peak D? If you look at the most obvious lowest low bar in the Chapman wave, what we do, we try to identify the lowest low bar and then merely count each successively higher peak after that. When you get to peak D, other things can happen. You don't even have to know what the chart is. It's just you get to a D, that's where a deeper correction can take place. That's the fourth highest peak. We do it alphabetically in sequence to the upside. Can even go to E, F, and G. Not the point right now. D is really what we're looking at. And what are we looking at? We saw the D and the very sharp pullback from the round number 234700 in the E-mini made yesterday, almost at the end of the day. It was at the end of the day. No, at 22. That was last night. And then what happened, there was a very sharp pullback. Whole bunch of nervousness about Britain, I suspect. Not the point. The point is when the tide, and this is really what I wanted to say, is when the tide is defined as changing, it changes in, if you throw a piece of driftwood, I'm going to be discussing this in my webinar coming up on Thursday night. This is going to be a very comprehensive webinar, really timely. Why? I'm going to be discussing what stocks and ETFs should participate in the next part of this mega bull market's up phase when the correction is completed, and I believe we're in a correction phase right now. And that's April the 20th, 2017. 6 p.m. Eastern Time to 7:30, presented by TFNN. And let me show you something. I'll go back in a moment to the dollar and discussing what we're discussing in terms of the peaks and troughs. But most importantly, let's see if I can get to the slide. You cannot be afraid to go long or short right here. It's a convoluted market in that there is strength and there is weakness. And if you can define it, I'm making my webinar, I've almost completed everything. I just have to put in some charts. But right here, I said, looking at other charts, we were looking at different aspects. What is going to be strong after this correction? What is going to be weak? And that's correction going into Thursday night's webinar. And I had two stocks that we've had on our list for ages, SSYS, and DDD are the three symbols, 3D Systems, and why do I always Stratasys Limited. And these are 3D companies, and I love the charts. But I thought, we might just get a little bit of a pullback. So I'm discussing everything that I like. There's stocks that we are long right now. We're actually long individual stocks that are doing quite nicely. They're up. So you cannot be afraid of going long if you've done your homework on the chart formations. Now, let me just go back to what I'm looking at over here. When I mentioned SSYS, look at this. It made a peak D. I'm waiting here patiently. Actually, it's peak E. Yes, leg E yesterday. And I'm busy waiting patiently just for a little bit of a dip under the 200-period moving average for us to try to go back into one of the 3D stocks. Yes, legs. Brand new leg C, it's up 10% today at 23.51, up 2.21. Never got in. I just, look, everything about it said should be a little bit more of a pullback, and DDD Systems is up 2.55% at 15.26, up 38 cents. Gone to that leg D that I notated and everything. We had it as long at 14.83, got stepped out for a small loss, never got back in. The analysis was exactly correct, but our trade was not. And that's what I'm going to be looking at this coming Thursday, because there are stocks that are holding very, very nicely. So let's get back to the story that I'm looking at. See, here's the issue. Look, the dollar is down very sharply. It's the same pattern we've been looking at in microcosm and macrocosm. A large arch formation, and then you make it smaller, inverted V shape almost. This is why do I say familiar? Hey, didn't we just see that? A large arch formation, inverted V shape formation. Do you have to know what it is? No, you've got to know that in the market, there are fractals that get repeated over and over again. And it's so interesting and fascinating for me. You can have it occur. This is the E-mini 10-minute chart. What I showed you a moment ago was, I can't even remember what I showed you a moment ago. What did I show you a moment ago? Oh, I showed you the dollar. What relationship is there? So here's the dollar in this large daily, February, March into April, arch formation, inverted V-shaped pattern. And now you can see it's coming to an apex here in the weekly chart. So the dollar's acting badly. Well, wouldn't you expect that gold right now would be up about $14 or so after all? Whoops, so put it in the wrong place. Take that out. I'll be back and I'll explain some of these patterns of what we're going to be looking at Thursday, since we have sell modes in the Dow, S&P, Qs, semiconductor index. We are short. We'll talk about that when we get back. As soon as we get back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. So let's get to some of these questions. First of all, Goldman Sachs. Goldman Sachs came out with earnings, and I discussed this yesterday. I think I mentioned it on air. I said that even if there is a pop-up in the aftermarket, I suspect there'll be a pop-up and then a pullback. Well, it didn't even pop up. It just went straight down. It's down $9.31, down 4%, 216. I think this is a tell on the market because I think that for the big mega move that we're going to have, I suspect Goldman Sachs is going to be a big participant. And ever since they got clobbered with all those lawsuits and everything, they've just been quietly doing their own thing and doing it in a different way completely. They can't do what they used to do, which tells you that the information that they used to receive, how do you have 98%? I don't know what success rate they had almost every month without getting something that most of us couldn't get. I just don't see how. Now that they're not getting it, you can see it's a problem. But I think that they will come back as stars. Goldman Sachs, they were there in the 1929 period. That's when they went public. Let's get on with the markets. So Goldman Sachs, $212.50 is going to be the 200-period exponential moving average support. It's at 216.97. I'm not sure it's going to stop right there, but I think that a big chunk of the down move might have been done in percentage terms, going from the 255 level down to 216, 40-point decline, 20-something%. I think that, I'm not sure I'm looking at another 20%, but I think you could be looking at another 7 or 8 maybe. Okay, next thing we're looking at here, so that was that. And Bob wants to know about J&J. Hey, I looked at J&J the other day and I thought, this is a fascinating chart. Made a peak F with a silent doji way back on the 15th of March. Next day was this what I call Chapman Wave silent doji. Once did a webinar on that. That was at 128.70. And today it gaps down 4.41, down 3.5% at 121. One of the reasons why I looked at it, in fact, it was just last night, I was looking at it and I said, you know what? This has all the signs of a right shoulder failure pattern in my Chapman Wave methodology book. This is what I call the right shoulder formation. And look what happened, kaplop. I'd be real careful. And it seems to me that some of these stocks, I went through a whole bunch of these. So GIS is the General Foods. It's up nicely today. But look at the big move it had from the 63 level down to the 57. I mean, that's a big move. So it's having a nice move on the upside today. A low of DC. This is a trough D in the weekly chart, so that's good, but it's still not a great pattern. So this is what I was looking at was defensive stocks. In other words, we look at foods and things like that in terms of not defense, Raytheon, etc. No, this is foods and household products, etc. F, a leg F could have been recycling here, but I'm calling it leg F in Coke. Up very nicely today. There are a couple of stocks you see that are ameliorating the sharp move down in some of the Dow stocks. So some of them are acting quite well. Now let's just look at. I had it on. Oh, it just flashed by me because I needed to do it. Clorox. There you are. CLX. Clorox. Nice move today, up 65 cents. But these are all within that containment of the potential right shoulder failure pattern. So I'm not sure. I almost thought, you know what, maybe we'll buy some defensive stocks like a Clorox. Then I thought, you know what, I only want stocks that have absolutely fabulous chart formations. That's what I want to see on the long side. And that's what we're trying for. Here's another thing that I wanted to look at. So Bob, in answer to your question here, Merck, not good, going down to the 61.60 200 period exponential moving average. Weekly chart, I've got this as a C. I'm not sure. This is the weirdest wave count out of thousands, not thousands, not even tens of thousands, out of the hundreds and hundreds of thousands of charts that I've done. It's more than that even. This is very unusual. I could have called this an instant restart, 1, 2, 3, but it took 4 bars. Well, I guess I could. A, B, C. If I did that, it resolves everything. And then this is A, B, C. I'm going to put that in. That's the only way I can do it. I spent so much time on this. And I was thinking maybe I should do it. Now I'm going to do it. So we're going to edit and we're going to put in a D/C. And that's really what it looks like. So there it is. Merck made a peak E in the monthly. I'd be real cautious here. I don't think these things are going to trade very well. So in the whole area of pharmaceuticals, etc., PPH is I used to have it all notated. Of course, it's all disappeared now. No, there it is. You made that peak A, B, C, D. Yeah, so there's an alternate count. You make your high on the 16th of March in the PPH, the pharmaceutical ETF. That was at 56.35. And here we are at 53, just down 3 points. But hey, look at those 3 points. Look what they've done. They've messed up the daily chart, sell mode, completely confirmed sell mode. Weekly chart has been in the sell mode for a long time. This rally retracement failure went to a D right there. Remember, what do I say? At Ds, you've got to be real careful. And here we are. Weekly chart goes to a leg D, and now it's a peak D. And I should technically on Friday be able to put a down arrow. Actually, I should do it right now, but it's a down. So this is not looking good for PPH, right? Next question I had was RLX. RLX? Dollar RLX? What the heck is that? No, it's not that. I think it's, what are we looking at here? RLX. Oh, Walmart. I think it's RTH. Let me just look at the RTH. The RTH is, there we go. RTH right here is, I've got it, is in the same pattern. It makes a sharp move to the upside, pulls back to a peak D. Remember peak D? Rallies up, goes to a B, and this is probably going to be a B minus because it's going to arch over. That's the way I'm looking at it right now. This is the one that I have to say, we've got an up. You know, if you use the SARS, and the SARS here right here is, we've already hit it. And that says we should be going down the parabolic SAR. We just hit it, and now we should be pulling back a little deeper. And the weekly chart has this, what is the RTH? It's the Market Vectors Retail ETF. And look at this. Coming to an apex. We're looking at so many charts coming to an apex here. They're going to have to make a decision. Breakout, breakdown. What the heck? And let's just look at this one here. We're in the Chapman Wave inside track support level. So, question in Denmark. Kenneth says, hi, Basil. Do you have time to take a look at the potash stocks, MOS, IPI, and POT? I'm holding them with small loss. Not sure to keep them or hold them. Yes, sir. We'll do that right now. MOS, I've not notated for a while. Let's see what it's doing here. Oh. trading at $27 and a penny. The MACD is still down sharply. The stochastic's down very sharply, trying to flatten out. Let me put the two together. Yeah, let me see. We're going to have a break in a moment. I'll be able to update them. Potash has made a peak D in the weekly chart, way up at 20.26 on the week of the 21st of January, and now it's trading at 16. I would say that that's a big dip. And there's that arch formation that goes to a lowercase m. The lowercase h goes to a lowercase m. I'm going to do some notating over the break, Ken, and I'm going to look at it in terms of, is this getting close to some kind of buying support? That's the only way I can look at it, because they look horrible in the weekly and monthly charts. I'll be right back. Basil Chapman, Dow's down 90, S&P's down 6. We'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Basil Chapman. So this is what I was looking at here. Moss, which is the Mosaic Company, agriculture. I can't remember what they have. The other one, potassium, I don't remember what they had, but potash are the other two, IPI and potash itself. One of my big issues here is, you remember we had this chart with GE and I talked about a fulcrum? I wonder if I can find it, because you need to see patterns repeat over and over again. You just got to know your patterns. Remember GE way back? Let me see. I'm going to try to find it. GE. There it is. You see these patterns right here? Looks exactly the same. GE makes a top on July the 20th of 2016 at 32.95 at a peak D. How many times are we going to see these peak Ds? The fourth highest peak, really important. Pulls back sharply, gaps down and pulls back, and then it goes sideways in a very narrow range. The only time it's been in this range for ages. And then what does it do? I said, be careful. This looks like an inverted Chapman wave stalk leg, and we should break to the downside. If we break to the downside sharply, you could, in fact, get what I call it even says there, look, Chapman, oh, I forgot about that. Look, it says Chapman wave inverted stalk leg and propeller shaft 1-to-1 extension. Well, not only did we do, and I measured it, there's that dashed line. See the measurement? Then what does it do? It doesn't start a rally. It chops. It makes a second one, 1-to-1 extension. Finally goes down to 28.19. So let me go back to this chart here. We're looking at potash, and look at this pattern it's made this right there. It's kind of almost the same pattern. Look, comes back sharply, goes side, and now it's starting on its way down. And the MACD still has plenty of room to go down. It's under the 0% line, and the stochastic is at 12%, and it should rally from here, and it hasn't shown any. It tried yesterday and then couldn't hold it. I'm looking at this and I'm saying, you know what? Let me just see. Did you say you had potash? Yes. So potash is the better looking one right now because all it's doing is walking under. It's got it's like one of those cable cars. And there's a cable car line, and it keeps trading below the cable car line, right? Instead of walking the 9 EMA, it's sliding down the 9 EMA. So that says to me, that's a better looking one. Let's go to Mosaic, MOS. The chart of Mosaic itself has gone sideways, and this is the one that makes me the most nervous. Why? Because the monthly and the weekly says even if it stops here, it's going to have to take time. So Mosaic 26.97 down 39 cents. I need to also, while I'm talking about it, let me just show you something. Look at the time. Yep, we're good. Look at the TRCCI. Look, here's the commodity index. This is the one that I follow closely. And that's not good. It made a large arch. Now it's making a smaller arch failure in the daily. The weekly chart has the cup formation that says if you break 1/3 to 50% below the left side lip and the trough, you can very easily test the low. And that would be the low that right there. It's trading at 416. The low would be down at 408. All right, still a long way to go. And if it breaks under that, you get a 1-to-1 to the downside. That would be a large arch formation. So I could be completely wrong, Ken, but I'm just going to say to you, so far, I'm saying to you, potash is a slightly better chart pattern. It's not great, but it's better because it's having so much smaller of a decline each time, but it's still 0.16% today. So I don't like it. I just don't like it at all. Here's the other thing that I'm looking at. I'm looking at, what was the IPI? So IPI is a potash company. It's different. It is the Intrepid Potash Inc. So this has gone peak A, B, C. Lo and behold, what did we do? We get a D. Did I know you were going to call when I was discussing peak Ds? No, I didn't. Well, you didn't call you in the den and you IM'd me. I, A, B, C, and there's your D. This is the best looking of all. Yeah, this is what I'm going to say. Intrepid Potash Inc. trading at $1.82. I never look at price because I like to look at the chart formations. It's up 2 cents. This is the best looking of the bunch, but this is not great. I wish it was trading at $18.20, 10 times higher, because I could give you, this is, wow. All I can say is be real careful. This is the best one, and it's $1.82. So I'm not sure that you've got as much money in this one as you have in the others. Here we go. So potash, I'm going to suggest to you, I would put in a stop. Wow. I'm just going to say to you, I would take something off right now at $16.55, and then the rest I would have a stop of maybe $16.30, $16.20. In terms of Mosaic, M-O-T, no, M-O-T was Motorola. M-O-S used to be Motorola. I just get out of this right now. If you've got a small loss, out. That's what I'm saying. Out, damn spot. I don't like this at all. It could turn around tomorrow, but I'd rather be buying up higher highs and higher lows than lower highs and absolutely lower lows. So I don't like this one at all. As far as IPI is concerned, it's holding. I'm not going to say anything about IPI. Hold this one, but be prepared that if it takes out today's low of 1.76 at 1.82 right now, I'd be out. I'd be gone. And I wouldn't pile money into this one because it's the best looking one. No. Be careful. Okay. So I hope I'm sure that's not what you wanted to hear, but I'm saying for you to just be really careful. The commodities seem to be, I'm going to do this again, TRCCI, the commodity, don't type it on the chart, type it in this little rectangle, right? Yeah, dollar, TRCCI. The commodities seem to be under pressure. Gold is something very different. And, you have most of IPI you sold. Okay. IPI. I think, Ken, you're playing it exactly the right way. You're out, you say, of MOS, and you have most in this IPI. If most means that it's still only a small part of your portfolio, bravo. I'm with you. It's a kind of a spec, but I think this one, look at the way it's acted. It's gone to the Dean. It's pulled back 2 days, and now it's having a nice try at rallying. The monthly chart is terrible, but the weekly chart shows a nice V-shaped attempt. So I don't know why this one should be different, only because it's lower price. I'm just saying to you, be careful. Don't get too carried away. And if it does rally and it goes towards the 192 200 period moving average, start to put in a stop on 1/3 of your position. Raise it, because it's not having such big moves that you'd get stopped out. Just put in a stop, a reasonable stop, and see what happens. So, folks, I need to get back to this because I spoke about a week and a half ago. I said, I think we're in a phase where we could see a 300-point decline at some stage. I don't know when it's going to happen. Something's wrong with this market. It is just too. Oh my! Look at that! I didn't even look at that. Here we go. Look at this. There are. So there's your H that goes to a lowercase m pattern. The lowercase h goes to a lowercase m, and then it plunges. Look at the let me look at this. I want to go to the daily chart. The Dow is down 141. The S&P is down 11. Don't take this as if nothing's happening. This market is highly volatile. We are lucky we have some stocks that are doing very nicely on the long side, not the ones we are short via the long ETFs. I'm talking about the long, and the day is young. Anything can happen. I'll be right back. Basil Chapman, Tiger Technicians Hour.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So here's the 10-minute E-mini. You remember what I said about the arch formation? Deadly. It's just it's something that, look at this. Look at the large arch formation that's going on right here is where there better be a pretty decent rally, because if there isn't, I think the disappointment in the market is going to be felt by 3 o'clock. This is not a day for playing games. I tell you why. There is a disbelief. And when I've listened only occasionally to some of the news, to CNBC or Bloomberg, and some of the financial shows over the weekend and the last couple of days. I like to get a feeler for what's going on, and there were very few people that I knew of that were actually bearish, and that said to me, "Gosh, we've had such a spectacular move. Surely you'd have to have some sense of deliberation in your gaming of the market to say, wait a minute, we've had a spectacular move. November, December, January, February, March, all the way into April for the QQQ series. Surely this is the period where they should." And remember, I did this analysis. I was asked about something just recently. I said, in terms of politics, and I said, if I had to do a political analysis of the president, I thought I understood him a long time ago, but I never defined it in my mind because I don't dwell on those things too long. I do dwell on my mega bull market, which I'm going to be talking about, those things, those icons that we look at all the time, 1,000 new hotel rooms being on the drawing board for Boston. Whenever I see that, I just know, watch out for real estate. So as I'm putting the whole thing together, I said, I finally understand what this president's about. It's just really clear. And the market isn't going to like this phase right now. And my contention has been for a long time that most presidents, when they are done, you look back, they've done 1, maybe 2 things really well. And there's a lot of stuff that just wasn't done well, or it just wasn't done at all. And now you've got a president who's trying to do innumerable things, not just small things, but big things. So my contention is that this is a market that is fraught with eco-political uncertainty right now. My expression is that markets deal with uncertainty. Everybody says, oh, the market hates uncertainty. I say, baloney. Every single day the market deals with uncertainty. What it doesn't like is uncertainty about uncertainty, and that's what we've got. It's one algorithm away from the norm. And that's really what we got. So now this is it. You're seeing it break right here. I kept it up. The 10-minute chart, bam, it's just about to take it out. Boy, I hope it doesn't go down too deeply. This could be a very ugly day. Now let's go back. And now's IP up 2 cents, up 3 cents. Hey, bravo, Ken. Good move. So this is what, let me just do this because I know I got a lot of other emails and all that. I'm not interested. I'm going to just step aside for a second. I know that there are too many people that can get hurt if they're on the wrong side here. I'm not telling you whether you're on the right side or the wrong side. What I am saying is that within the context of markets that we've looked at, we've been short the Dow for quite a while. We had that sell signal that was generated earlier on in the daily. Last week and Friday, within an hour, the Dow weekly chart went from a sell signal to a sell mode. That's just an expression to say that it's reached a certain point, and that's its designation. That's not a forecast, but the forecast is that the MACD is still very negative, and even with yesterday's move, look, the daily chart just didn't even recognize it. Yesterday was a strong day to the upside. I don't like that. And the other thing is the stochastic's now down to 61%. You remember just 3-4 weeks ago, I was saying unbelievable, 97, 98% in a weekly chart. The trouble is, remember what I was talking about when I did that analysis with Tom on air weeks ago, weeks and weeks. I said, the reason why I'm putting in a little yellow rectangle here is that after every rectangle that I defined as a pullback, the stochastic, which was holding steady, dropped sharply. And that's exactly what we've seen here. And that rectangle now gets extended a little bit. So my contention is that we've got to just be really careful at this particular point, right? Because we've got weekly sell modes for the very first time in ages. Here we go to the S&P, SPX.X. The S&P, same thing. It's under the 9-period moving average for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 out of the last 13 days, the S&P has closed under the 9-period, that black line, the 9-period moving average. Look at the MACD and stochastic. It's not good. And the S&P weekly chart on Friday, look at that red candle under the 9-period moving average. It gave me a sell mode. Monthly charts are fantastic, both in the Dow and the S&P. Still outstanding. So here we go to the QQQ. Well, it was the last to turn down. It's down only 28 cents today, 131.20. But look what happened. This pattern is very familiar. The best case for this pattern is that we take some time and we're just consolidating. I could do this. I could do the rectangle. But instead, I'm going to do something else. I'm going to say, you know what? A best case is that it doesn't take out. This is one of those very long, every once in a while we get an extended. This is having twins stalk leg formation. And look what happened. So now what it's done is we can talk about that. It's a long leg up. This is the body. Neck hasn't started. So if in this pattern, if the QQQ series doesn't even have to close it under it. It just has to hit 129.80 in the next week or two, and it's all over. You don't get this pattern. It's not a stalk leg. It's the rectangle. Then you need to close under 129.40, and it's all over. That weekly chart goes into a sell mode confirmation, and that says you should at least have another 2 weeks minimum of down move, if that's all going to happen. A lot of Fs, but it's only leg C in the monthly, fantastic monthly. So in all these indices, you've got daily sell modes, confirmed weekly sell modes in the Dow and the S&P, but I haven't even really officially got a sell signal. I have it in the notation of a peak E with a red plus sign and a Chapman wave 5, pretty sure. MACD's turning down just about across negative. Stochastic's now at 87%, still very good. So I haven't got the sign yet. But wait a minute. One of the leaders to the upside was the SMHs. And the SMHs are down 6 cents today at 77.02, has given a sell mode, we're short, the sell mode indication in the daily. And the weekly chart went to a sell mode. I didn't put that in. Sorry, that is an official sell mode on Friday. And that should be a down candle at a PE at 80.05. And that says to me, this up channel support level, let's give it a little bit of leeway. It's 77.03 right now. If the SMHs closes below 75.50, that's a real problem. But it's only leg C in the monthly chart. And that's looking out, that's very bullish. So I'm looking at this, and I've said it before, and I'll say it again. a short-term to intermediate-term sell is underway. It should take a few weeks to go in the QQQ and the SMHs before everything's in sync. Buy signals occur when the VIX index screams to the upside and you get an ictus at the bottom, like you did in March of 2009 on the Friday, the 6th, and then the Monday, that was the down on the 9th was the S&P. Remember, we were lucky we got long right at the very low of that major move down on the 6th of March. We bought the Dow diamonds. So, and then we got out about 18 months later. All right, I'll be back. Basil Chapman, Dow's down 141, S&P.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Since I'm a pragmatist, that's really where I look at markets. That's how I developed this whole Chapman wave concept. If you look at the NQ weekly chart, it should be at a peak C with a doji candle at the top, which always indicates be a little careful here. But because of the years and years that I've done it, because of the hundreds and hundreds of thousands of charts that I've done it by hand, I've had it tried by other means, and there are ways of doing it, and it's very good. But when it's wrong, it is so wrong, it can really cost you a lot of money. That's why I do it by hand. So you see this move on the NQ futures, that's the E-mini NASDAQ 100 continuous contract at 4,900.50 the week of the 2nd of December. Look what happened. The next week it was 49.01. So it's 50 cents difference. I didn't want to count that because I like to be as strict as possible, but there's a thing called the Chapman Wave Phantom Peak. And when I do enough of these and I look at them, over the years, I'd come to the conclusion there's a way that if everything is in place, that everything looks like a duck and it walks like a duck and quacks like a duck, it is a duck. And that looks like a peak D right there. I could be wrong because all you need is a breakout above 54.81.25 to 54.81.50, and you've got yourself a leg D, all right? I don't know if that's going to happen, but right now what I am looking at is there's a real good chance that my alternate count says that this is a D. So all the little ducks are in order, and we've got that in the QQQ series. Look, QQQ went to an E. So when everything lines up, that's what I love to see. So, okay, now let me just do this quickly. I want to show you something here. This is the webinar that I'm going to be doing on Thursday night. I think it's a very important webinar because of the timing. Not only is it an important webinar because I'm going to be talking about the techniques that you also could look for within finding the weak stocks and the strong stocks. That's the other thing is I'll give a quick definition of the Chapman wave, what it's all about. I'll describe the big picture because I know a lot of you are saying, all right, I've got my funds and all that besides the stocks that I have. What the heck do I do? I'll be discussing that in terms of what I'm looking at, that I think this is going to be a little bit deeper than people think, the downside, and maybe a little longer. And at the same time, I believe that we are still in a major bull market. This is comparable, I'm thinking, to the Marchish 1929 decline before you had the major move to the upside. That doesn't say September, it's all over. It just says that this is that move that says, oh, I got everybody in, now I'm going to go down and teach them a lesson. This is what the market does all the time. So Thursday night, my webinar, on not only the Chapman wave, just very briefly, but I'm going to be going through what we're looking at, why we're looking at, what are the strongest stocks, what are the stocks that might lead us up in the next move, what are the ones that could be good in the interim period. We've already tried again. We've got some right now. Both of them are in the plus side. We're doing okay. So these are regular stocks, but we also have the triple shorts. We're long the triple shorts. We also have one-to-one short. And we are looking for lower lows to come. Be careful. That's all I can say. I'm going to emphasize it again. Yes, that 10-minute chart. Now it's broken, the left side low. Just please be very, very careful. And I hope you can attend my webinar. Go to the front page of TFNN. You'll be able to see that you can sign up. Actually, it's going to cost you nothing. If you want a trial subscription, you'll still get the webinar. But of course, if you've got the Tiger Dollars, that'll be a great way to initiate your Tiger Dollars. So please consider it. I've done this a long time. I've done a call on the Dow almost every single day for over 30 years. I don't know how long it is. I used to do it for FNN. You remember Larry was talking about FNN. I used to do it for the local FNN Financial News Network here in Boston. I used to make a daily call for a long time. So I've been around. So with that in mind, just be real careful, and I'll see you later on today with Tom O'Brien. Otherwise, have a great day. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TF. TFNN.